Awesome. So as I mentioned, once you log in into the uLaw platform, you have your dashboard that allows you to navigate and maneuver within the system. So if you have a contact, you can click on, let's say, Daniel Craigson. It takes you right into that contact information. And if you have already started inputting contacts, then you know that's your pathway into creating a client, right? So let's say add new contact. I'll say to clients, Mr. Jeffrey Fishborn. I'll say maybe through a family. So this is, again, a source of contact is a very interesting field that we encourage all our uLaw users to utilize because it gives them a perspective. How did Jeffrey get to know their legal firm to begin with? You could say a correspondence address. And you can make this the home or work. Always ensure that you have a mailing address chosen because that gets used across invoices, your correspondences, including your envelopes and things of that nature. So this is really your first step. I'm sure you've already done this before. If not, this is your first step into creating a client into the uLaw system. So you click Save. That's really the next menu option that you have after Dashboard. I'm going to go ahead and click Save. You can see it says Saving Contact. You pretty much have to wait for this to disappear, and it brings up Mr. Jeffrey's information. And then you can start to work on Jeffrey in terms of conflict searches, in terms of whatever information that you need to do. So for conflict search right away, as you know, you get into Action, Conflict Check. You can do a simple conflict check for just first name, last name, in which case you uncheck all of these. If you want to do a deeper dive, you can do conflict check and then say any matters created for someone like with the name Jeffrey. And uLaw does this in the behind the scene, if you will, background. You can continue to do other things in the meantime. You can print labels, envelopes, before you move forward with creating a matter for Jeffrey. You can see there's only a couple of last name conflicts. There's a Fishborn, and there's a Jerry Fishborn. And no matters have been created for either of these. So again, based on this information, you can of course make a informed decision. Another way that I've seen people do is if you really think that this is a first-time name that you've never come across such a name, you can just type in here in our search called fish, and you can see if there are other pieces of contacts with that first or last name. Okay? So go into our Jeffrey Fishborn. Once you've done your conflict searches and you've determined it's a go to go ahead and create a file for this person or a matter, you would click on this matter button. So this is now me navigating from contacts into matters. And let's say this is a small claims matter. I'll say Jeffrey versus Smith. This could be anything, right? And we have our spell check tuned to the American English, I believe. So I go ahead and click Save. Again, it's a saving matter. And now what uLaw does is it creates a unique cross-indexable, referenceable file number or a matter number. It takes the first alphabet, first initial, last name, first initial, and creates a hash on today's date and time, which is always unique. Now, this is where you pause. You send them a retainer letter. So we have quite a few examples of that. You can do it right from letters, or you can go to our document generation, letters, and you have the same opportunity here for hourly, contingency, some additional samples. Okay. So let's say I choose a general retainer. I can choose to create this in Word if I really want to edit this. There you go. You can fine tune this, you can tweak this. And this basically takes your information, so you can see it's the fictitious uLaw user that I'm using, Roger Moore. This is our client, Jeffrey, and his mailing address, the file number. It basically merges information that's already stored in the uLaw system, such as the fact that you're from Ontario, so there's a HST component, your rate per hour. Again, this can be modified, but this essentially is coming from the uLaw system as well, right? This is coming from your settings. If I go real quick into my settings, taxes and rates, you see the default fee rate as 400, and that's exactly what gets copied over default as the rate for this matter as well. You can go ahead and change this to 200 if you like. And if you generate the Word document template, you can go ahead and change the information here. Plus any out-of-pocket expenses is what we've signed up for. So let's agree that, you know, customer understands this is a $200 per hour matter plus taxes plus disbursements. Okay? Let's assume that the client has signed this. You move forward to the next step, which is getting to do your work. I think this is where it gets, again, before you get started, when you send a retainer, the idea is if you're accepting money into trust, as part of that retainer agreement, if you agreed that you need kind of a retainer in advance that needs to now be deposited into your trust account, and that's one route. If you're not going to be using the trust account, that's typically an engagement letter where you're going to do the work up front, generate timely invoices, and hope that the client, leap of faith, pays you based on the invoice generated. So just a quick question, if you wouldn't mind me. Do you want me to take the route of a retainer being involved, Katie? Would that be okay?
Sure, that's fine.
Okay. So let's assume there's maybe a $800 or $1,000 retainer involved. So the first step in uLaw is to enter that information that you have received that $1,000 and all the particulars regarding that, right? So how did you receive it? When did you receive it? Where did you deposit it? When was the deposit? All that good stuff. So in uLaw, you can either go into the Trust tab and say Deposit into Trust if you're just following the money. Or if you're just following the English labels, you can just say Retainer, New Retainer, and it's the same screen that eventually gets used. So whether you go into Trust, Deposit and Trust, New Retainer, it's the same screen. So let's say it's $1,000 received today, and I received it as a check number, and I deposit this into my TD Trust account. Give your client a receipt, and hit Apply. Okay? So now, in uLaw, you have reflected that you've just received a $1,000 retainer against this matter from Jeffrey. If this is other than someone else other than Jeffrey, you can put their name in, then the receipt would be made under their name. I'm going to go ahead and download this. And here is your retainer receipt. You can put your own banner, you can put your own logo, right? So here's $1,000, all the relevant information that we need. Any questions so far?
Anyone have any questions so far? No, not yet.
Okay. Moving forward, now you're going to start to docket and disperse. I think that's where we're getting started. So if you look at our disbursements demystified, right, one of the items that we highlight and we continue to stress upon is the advantage that you have as a legal practitioner to be dispersing and using your trust account to pay for disbursements, right? Because disbursement is nothing but expenses incurred by your legal office on behalf of a client's matter, which means that you pay for it and you recover that from your customer. It's not an office expense. It's not the electricity bill that you have to pay for your office. It's not your rent. It's the court fees and the application fees and everything that's related to a client's matter. Yeah. So it's never your money to begin with. You're just taking the service of paying for it on behalf and recovering it. Now, the challenge often that happens in a legal firm was when there are multiple matters and there's quite a few disbursements, and especially if you're not utilizing the trust account, which means that you're now paying for all of these disbursements cost out of your own pocket or from your firm's pocket, then it's your due diligence to recover this from the customer in a timely manner so that you're not losing out on that money. Because what happens is if you pay a $100 application fee and you're unable to recover that from your client. And that's why we encourage, and we talk about this in our webinar, that you have this unique opportunity to utilize the trust account as a means to pay for your disbursements. Because you've got this money in advance, right? You've got the trust money as a retainer, and often people, when they first get started, they could add a few, based on prior experience or from learning from seniors in the industry, you could say, all right, small claims matter, I think it's going to be about $800 fees, maybe a couple of $100 for your disbursements, and hence I'm going to ask for about $1,000. So include, if possible, those disbursement potential costs into that retainer. And the key steps as we talk about disbursements is being able to record it in time. When was it paid? How was it paid? And the reason for the expense. Application fee, court fee, fax, whatever it may be. The specific client and matter information. And then which financial bank account did you use to pay for this? Okay? So let me show you an example. So in this matter, let's say there's an application fee. Again, you can follow the label, disbursements, or follow the money, depending on where this money is coming into or leaving from. Again, let's assume you're using your trust account to pay for your application fee. Right? So you would say, add new disbursement, and you can see right away, we ask you, is this money being taken out of your trust account, or is this coming out of your general account? And if it is coming from your trust account, you could say paid from trust. It was $100, or it could be $200, whatever is the amount. How did you pay for it? Maybe you wrote a trust check, which typically is how I've seen people do it. And you could say this was to application fee. And it was paid to the Ministry of Finance. Or whoever you're making this check to. Sometimes it's the Attorney General, if it's a court fee, I think. And the last thing is, which trust account is this money coming out of? And the reason this is a test account that I'm using. Typically you have not more than 2 trust accounts unless really needed, right? So you have the same TD account where you deposited this $1,000. That's the same account that you're retrieving this $200 as a check. uLaw also allows you to print this check if you want to go paperless or more digital. You leave the check leaflet on your printer, and you can just download this document and print it against that and it would emboss right on top of it. So you don't have to write this. Now you notice as soon as I have, so under disbursements and retainer, you can see I've got the retainer of $1,000. The same day I've made a payout from trust towards a disbursement that I paid through a check. I can always come in here, edit this item, and change the numbers if I have to. As long as I've not invoiced and accounted for it already, I can go ahead and change it. So maybe this was $180. You can unlock it and then say payments. Now you're going to notice the trust receipt moving to 820. There you go. Okay. Now, how do I recover this? There is no reason to recover it, to be quite honest, because you've just taken it right out of the trust account. Okay? And what happens is that becomes more of an information to your client saying that you have utilized the trust account to retrieve that money of $180 towards the application fee. So when you start to docket, so let's say you're docketing your initial meeting and you're charging now, let's say, an hour. The billable time is what you're charging the customer. And the duration is the actual time that you spent. Okay, maybe you spend 54 minutes, but you're rounding it to 1 hour. Now if I click Save, you're going to notice that uLaw is going to take this 1 hour, multiplied by the 200 plus the tax. And that's why you see billable time at 226 at 13% tax. If you're not going to be asking for tax, because when you get started, you're not doing that, you can just click Edit, come into this default tax rate, and make this 0. But you do have to do this on a matter-to-matter basis, because we don't know which matters you want and which matters you don't want taxes to be included. Okay? So as soon as you remove the tax, you're going to notice the 226 drop to 200. Now let's show any questions thus far. I showed you one way of dispersing.
Any questions? No, no questions.
Okay. The next way of dispersing is having a retainer in place, but maybe not paying it out of the trust account because you don't have a trust check. Let's say it's as pragmatic as that. You only have general checks. Now what do? It's still very beneficial to have a retainer, because now what you can do is you could say, all right, it's a disbursement. No, I'm not paying it out of trust, but I'm still paying it out of general. So you could say I'm paying this an actual, and let's say this is, you can use any of those options to be honest, and court fee. And let's say this is $200 and tax exempt. You can say, who does he pay this to? And which general account is this coming from? So let's say this is coming out of my TD Bank out of Riverside Drive. Okay? Now this could be a direct, depending on how you used to pay for this, it could be check, money order, bank draft, direct debit, direct withdrawal. And if you have some kind of a reference number, you can put that in here and click Save. Now the difference from the last time to doing disbursements to this time is that this money has not yet been moved into your operating account. So you paid for it out of your own pocket, out of your general account. Now you need to recover it. But the advantage, the fact that you have a retainer, is that you don't have to wait for your client to pay you this. You just have to do what's called as a trust transfer. But prior to doing the trust transfer, you have to take one step, in addition to the previous way of doing things, which is generating the invoice, because that's the legal document that you can show for to ensure that it's the right amount that you've moved from trust to general. So in this case, you have one docket at about $200, and you have another disbursement, right, at about, what was the other disbursement? Another $200. And you can see the status right away indicate that it's invoice pending, which means you can go ahead and create an invoice. Now we encourage you generating pre-bills. So under invoice, the first option is a pre-bill. Here, you can decide, depending on your situation, whether you want to include dockets and disbursements in that invoice. Do you only want to generate disbursements or only generate an invoice for dockets? Because sometimes what happens is before you even start the docket, you may have several disbursements that you want to recover. Right? There are many different types of areas of practices where this has happened, and that's why we've introduced this feature. But I encourage by default leaving it at docket and disbursements unless specifically needed. And let's generate a preview. Okay? This pre-bill or preview is a great check mechanism so that you don't have to make a mistake and then send it to the client and then correct it and go through all that. This is a running bill, so you can clearly see that there is this 1 hour, no tax initial client meeting at $200 an hour. A pre-bill also has this nice watermark called preview, so you don't accidentally send it to your client. It included the disbursements of $200. And here is the running bill which says, yes, thank you for the $1,000 you paid me. I did take out $180 towards that application fee, and hence your current retainer balance is at $820. It's not $1,000, because that $180 is taken out directly from the trust account. Now from that $820, I now have a $200 legal fee and a $200 disbursement. That's $400. So I'm going to now potentially take $400 away from that $820, leaving potentially the retainer balance in your trust at $420. You have not moved it yet, but you're just indicating that when I do that, this is going to be the retainer balance in trust. Let's say you like this pre-bill. You want to actually generate an invoice. You would come back into invoice, click complete, and you can change this to different themes. You could say winter, let's do depressing, fall. So let's say, I don't know if there's anything else that's, I'll say calm orange. So let's say I invoice. So this is not a pre-bill anymore. This is an actual invoice. Okay. And here's that invoice. The same piece of information, but without the watermark. Now you can also generate this and say paid, so that your client knows that they don't have to make any payments, that they already paid for it in advance. So how do you do that? Go back, no pending invoice, reprint that, and when you generate an invoice, you have this option saying mark as paid. If you're generating it the first time, you can use it. If you've forgotten to do it, you can always come back, reprint that same invoice. Right at the bottom, we have this little paid stamp. Okay? Now comes the next final step in recovering your disbursement. And that is moving the money from trust to general, because you've not done that. In your actual bank account, you still have this $820 left. You need to move the $400 from the trust to general. Now, you may have done that in real life, but whatever you do in real life, touching your bank accounts, you do have to reflect it into your booking system or your book accounting system, bookkeeping system, whatever you want to call it, legal accounting system as uLaw is. And for us to know that you've actually transferred it, you can just come in here and click this question mark. Automatically, we even tell you the exact amount that you can do, keeping you compliant. So if you don't have this check, there's nothing stopping you from just randomly moving $800 or $600, because this is a pooled trust account, so you may have funds from other clients too. And that's a starting point for misappropriation of trust funds, and that's what gets caught during audits, right? So rather, you can choose this question mark. We tell you for this file, based on what you've invoiced, this is exactly what you can invoice or transfer. So you go ahead and hit transfer. We even tell you the disbursement and the legal fees. So again, question mark and transfer. Oh, what did I do? Sorry. Yeah, sorry. I choose both. I say I'm moving this from my trust account, and actually I'm moving it into my TD Riverside account. And in Ontario, which is where I assume you'll be working, or maybe if you're working in Ontario, if you move funds from trust to general electronically, you are required, and let's say you indicate that it's an electronic transfer, there's a Form 9A that the LSO requires you to fill out for every such transfer. So uLaw recognizes that you're an Ontario legal practitioner doing an electronic fund transfer. Hence, it pre-populates as much as information possible, your trust account, bank information, general account bank information. This is all required by the Form 9A. Okay? Here's the Form 9A pre-populated. Now where does all this information come from? In your accounts, in your chart of accounts, we initially, when we set up your account, or when you graduate, you will have your own trust account. We allow you to nickname your bank account with the bank number and address, which then gets copied over into the corresponding Form 9A. If you don't have it, that's fine. You just have to come in here and fill it. You just some additional work, because this is an editable PDF. Let's say you don't generate the Form 9A then and there. That's fine. You can always come into our compliance, monthly compliance, and you see Form 9A. You can pretty much download Form 9A for the entire month. So anytime you've indicated that you've done an electronic fund transfer within a file, we recognize there is a possibility of a Form 9A, and here you go. You have Jeffrey Fishborn with all the information. You can include your electronic signature right under our help. Okay. Personalized signature. Now finally you've recovered that $200 disbursement. Now you're a happy camper. Okay? And this is how you typically go about things. Now the third option, which is probably the most dreaded option, right? Everybody's like, ah, man. And that is, there's no trust involved. There's just a simple general account. So let's say for same Jeffrey, I create another matter. I'll say action, new matter. Let's say it's a Wilson estate, just for the sake of it. Or actually, no, I'll say LATB. Okay. Now this is the third variation that we talk about in our Disbursements Demystified. Okay. Now, this third option is where you have no trust money involved. You start the matter, you're going direct into disbursements, adding a new disbursement, paying it from general, and let's say this is a photocopy. Actually, all the units. And you can see when you go into photocopies, so basically I chose disbursements, and I chose mileage or units or actuals. So let's say this is photocopies. I got 100 of them. And my rate, again, this comes from my settings, is 50 cents a copy. You can either expense this amount to your local office business or say, I'm not expensing it. Okay? So there's about $56, right, worth of disbursement. Now the third option is that you have to go ahead and invoice. Skip the preview, invoice. The same thing that we did in step 2, or the second way of dispersing and recovering. You generate the invoice. But in the second, what we did was we just did a trust transfer. But now, there is no money in trust. There is no concept of trust transfer. It's simply you depending or reaching out to your client to request this payment. Again, that would be based on your terms. If you've got a net 30 payment, okay, this is where you have to be careful. You got to be like, reprint this because it copies over. Remove the mark as paid and generate that. And this is a PDF, so you can just simply email it to your client. Now you can wait to add a few more dockets, a few more disbursements, and then send a more bulkier invoice, or you can invoice as and when needed. That really comes back to your engagement letter. Okay? But how do you recover this? Is you wait for the payment, and when that payment comes, you can enter it into the system. And you can see we have multiple matters now. So if I put in 5650, it goes directly into load balancing the amount that needs it. And we integrate with third-party payment gateways. So if you're accepting this through, let's say, LawPay or TD or anyone like that, you can accept directly from a credit card if you choose to. Or you can go the old school way of a check. Or maybe they do a direct debit or direct deposit, whatever it may be. But very clearly, you got to indicate the trust general account that that money is going into. And give them a receipt for that payment, very important, so that tomorrow they can't come and claim that they paid you $65 rather than $56.50. Okay, so here's that payment, and you receive that $56.50. So this is typically how you would go about dispersing, docketing, and recovering costs from a disbursement standpoint. Okay, so this is your data entry into the system. Now in uLaw, every time you enter data, you can be definitely sure that there's a report that reflects that number or that data in. And this comes in two forms. One that are compliant in nature, reporting that's compliant in nature, and reporting that's important for your business. Okay, so there's two different agendas for our reports. Any questions so far?
Any questions? No, they're a quiet bunch.
So either you totally got me or you have no clue what I just said. Hopefully it's the former. All right, so now I move on to my final aspect of showcasing, within the context of today's demo, is the actual reporting itself. So if I move now from my matters to accounts, I can move into my monthly compliance, and I'll start with the compliance nature of the reporting. So if I look at my client's trust ledger, I can simply just download, choose the time period, okay? Now that trust disbursement gets reflected in my trust ledger. You can notice for Jeffrey Fishborn, I received $1,000 as a retainer. I had a trust disbursement of 180 that reduced my trust balance to 820. And then I have had two movements of money, maybe in one single shot, and that is exactly correct because it was a single invoice of 3382, which resulted in my trust transfer of $400. 200 was towards the legal fee, 200 was towards the disbursement. Leaving my balance for this client's matter at 420. So this is one area where we reflected that. If I go into my client's general ledger, disbursements are reflected there as well. If you look at Jeffrey Fishborn, here is a disbursement of a court fee of $200 with no tax. That's reflected. And you can see I've recovered those two costs, and hence my balance in my general ledger is 0 for this matter. Now there's something called as a general disbursement journal that has some slightly added information to give more insight into that disbursement in itself. Okay? And you can see for Ministry of Finance, for Jeffrey Fishborn, you had that $200 payment, which is a direct withdrawal that you paid to the Ministry of Finance. And that's reflected. Interestingly enough, this is a document which also reflects the office expenses that you incur as a business. Okay, that's your general disbursement. So uLaw, and I'm not going to confuse you here, but just so you know, it's also a full-fledged business accounting system. So with us, you don't need a QuickBooks to manage your office expenses. You can enter your office expenses and manage all of that readily right within the system. Because it's one system that allows us to now capture each and every data entry and reflect it appropriately into both compliant and non-compliant related reporting. That's the power. Otherwise, you would have to report out of your accounting system, report out of your trust accounting system, report out of your practice management system. So we've got 3 different systems built into one. That's the biggest bang for the buck, right? So let's say you've got purchase of a laptop at about $1,300. We automatically capture taxes. If you purchase this in Alberta or a different province, you can tell us what that rate was. If you purchase in the US, you can tell us what the fancy rate was there as well. You can override it. Okay? So paid to Best Buy, came out of my general account, or I could have paid out of my credit card. You just create those accounts as much as you need it to reflect the real life accounts that you have. And the reason I'm entering this is now if I go back into my compliance, I can do what's called as an expense book, or even that same general disbursement. Now if I do my expense book, which is very similar, this is a Law Society report as well. You can clearly see now it's included that $1,000 or $1,300 purchase of a laptop into the mix. Okay? And last but not the least, the disbursements, when recovered in time, also helps you with their reconciliation. Right? If you've not done the trust transfer in time, if you've not invoiced and done the trust transfer in time, you would not see the 120 being taken out of the system in time, or the 180, whatever that may be, right? So whatever you enter into the system also gets reflected in this box of reconciliation, which we'll cover maybe in a separate session. But here's the 180 that was taken out of as a trust disbursement for Jeffrey Fishborn. And if I go into my general reconciliation, here's the 1,130 taken for Jeffrey Fishborn as a retainer. And I can choose whichever general account that I want to reconcile. So you may have multiple general accounts, so you can choose right here. So you see this is a playground account, so you have multiple. I'm just going to wait for this to load, but again, you get the idea. Whatever information you put in the general also gets reflected into your general account. Any questions at all on how what you entered as disbursements then got reflected automatically? Because you didn't have to create the report. You just had to generate it, and it was already there. And that's how you go about reflecting that information in a report. Any questions around the compliance reports that we just generated?
No, I don't think there's any questions.
Okay.
There might be as we start doing them in class, but as of right now, no.
Okay. So hopefully I was able to accomplish by at least showing you how you enter disbursements, eh? So was there anything else that you wanted me to showcase for today?
I don't think so. Do you guys want to see anything else? No, I think they're good for today.
Okay. In which
Perfect.
case I'll stop the recording.
Perfect. When